SUVs. Mahindra & Mahindra is the next management of the show. It reported a strong set of second quarter numbers. Auto volume boosted revenues. In fact, my colleague Sudarshan spoke with Mahindra & Mahindra's ED and CEO Rajesh Jejurikar. It began by asking him about the quarter gone by and, of course, their October sales data as well. Listen in.
Recently, you announced sales for the month of October, and those numbers looked very strong. For passenger vehicle SUV growth, you have seen almost 27%. Tractor, the biggest positive was you have reported a growth of 13% while expectation was just flat year on year. So what exactly is working for you and how do you see the growth going forward?
Yeah. So Sudarshan, we're delighted with October. It's turned out to be a very good month. Just as a context to the viewers, last year Dussehra, Navratra and Diwali were all in the month of October. This time it's got split between September and October. Which is why the positive October numbers has even more meaning because it's been a split festival this year between September and October. We've seen a very strong demand through the festival periods. Depending on what you look at, retail or April to September or April to October or only festival months. We've been along the lines with the mid to high teens that we had said in the SUV segment. So that's been a very positive factor. Like you said, tractors, we had a billing growth, in the month of September, almost 50%. And then a 13% growth on top of that is a very good sign of the kind of retail momentum we saw through Navratra and Diwali across the country. The first part of your question is around SUVs and what worked for us there. Demand from multiple different sub-segments. So, our EVs have done well. That's added a completely new set of customers into our portfolio, people who were not considering Mahindra earlier. Many of them coming from luxury car segment. The two new introductions that we did, we introduced a Bolero new upgraded version and we upgraded the Thar 3-door as well. That's, worked for us. The 3XO portfolio, which is a sub 10 lakh, in the sub 10 lakh category, saw, the benefit of GST and that grew. But our mainstream brand, Scorpio, which is a very strong part of our portfolio, did exceedingly well. The XUV 700 did well. So, Rock. So, it's, I think, a strong portfolio that's now playing out and giving us the numbers. On the tractor side, both Mahindra and Swaraj, have been strong. And in the first half of this year, our market share collectively was 44%. We saw the benefits of product upgrades, channel strengthening, all of that play out as we've got into this festival period.
So you are talking about the festive season, sir. This time, apart from the festive boost, so GST cut was announced.
Yes.
And after the announcement, you would have certain expectations from the festive season. Do you think that whatever the expectations were, have you met it, like from the demand side? Do you think that it has been met? And for the entire festive season, if I talk about, what is the growth separately for PV as well as the tractor segment? Entire, like by the end of the festive season, what do you think would be the growth rate?
Yeah, so that's what I was saying. So on the SUV, on the PV side, as you call it, we would expect to have seen mid to high teens growth. On the tractor side, again, strong double-digit growth. So both of these in the festival period have seen strong double-digit growths in retail momentum. Of course, this year is not comparable to previous years because there was some transition issues related to pre-GST starting on 22nd September, customers waiting and watching to see, and get the benefit post 22nd September. So this year had a little bit of abnormality, but overall, when we see it in a totality perspective, it's been a strong double-digit growth.
So where do you see to end FY26 with outlook for both?
Yeah, so for ours, in the SUV portfolio, we're talking here, our growth, we expect to be at mid to high teens, which is what we had said at the beginning of the year. Okay. Tractors, beginning of the year, we had said 5 to 7% growth for the industry. Yeah. We're now increasing that outlook to 10 to 12% for the full year. So tractors, we've changed our outlook because of multiple factors. Good rains, very good reservoir levels, government spending in rural, exports of agri-produce happening, which is bringing cash into the economy, and of course the GST cut.
Now coming to the quarterly numbers.
Yep.
So it was an operational beat. As I talked about in my opening remarks, the biggest positive surprise was the margins. you have reported margin of 14.5%, very healthy set of margin. And apart from that revenue growth, like you have seen a growth of almost 21%. Now, what are some of the levers that if you can talk about this improvement in the margin? And do you think it's sustainable going forward?
I won't comment on the sustainable going forward because we avoid giving margin guidance. One of the things that we've as an organization, I think we manage well is doing the right level of trade-off between making sure we don't compromise on the ability to grow our volumes and managing our costs well in a way that we are able to get the benefit of that by way of decent margins. So we've done all the right actions, which is, the model mix, trying to sell higher end versions. In tractors, for example, we did see customers move up to higher horsepower, 40 to 50 horsepower segment. That improves the margin profile. Even on the auto side, we saw, people moving to higher end versions and variants. So that improves the margin profile. So I think it's a combination of multiple things, including managing costs, model mix, variant mix, and all of that.
So on the tractor side especially, the volumes were up 32% in this quarter. And there also you have seen a significant expansion in the margin.
Yeah.
Because in the auto part, there was a minor dip because of GST transition you have talked about. But in the tractor part, from almost 16%, you have seen a jump of almost 400 basis points, like almost 400 basis points to 20%. Now, with Rabi crop and everything happening, just on tractor part, do you think it's sustainable?
Yeah, so I want to clarify for the tractor part, the festival getting preponed is a big enabler, right? So, if you go to last year, Q2 did not have any festival. The full festival happened in Q3, which means the Navratra, Dasera, Diwali went into early November, but basically there was no festival in September. This year the festival had started in September, so we got almost the full 9 days of Navratra within September. So that impacted September numbers as well. And hence you get operating leverage out of that compared to last year. So, last year to this year, there is a little bit of seasonality shift, which is enabled this year. And I'm not going to comment on the guidance.
Perfect. So now shifting from margin to market share.
Yeah.
It's a huge gain across the board. In SUV, the market share has gained and it's now 25.7%. Similarly for LCV, less than 3.5 tons, even in the tractor part that you have gained market share. So in SUV, now with so many EVs coming up and you are going to launch a new EV, that XCV9S.
That's right, yeah.
So how do you see the market share overall by the end of FY26? Or rather than by the end of FY26, if you can just 1 to 2 year picture, if you can talk about SUV and tractor part.
Yeah, so firstly on the SUV part, our aspiration or our goal is to be revenue market share one. I just want to clarify that as an objective. And the reason we've set that as the goal is because our average price point is almost double that of any of our competitors. Our products are selling at much higher price points. The mix is skewing towards the higher versions. And which is why we believe that revenue market share is what we want to measure. So we hope to continue being number one by way of revenue market share without putting out a specific number. In the case of tractors, we are already in a very strong position. And we've gained 0.5% market share on top of that in the first half of this year. So I wouldn't want to give a guidance of whether in this year we're going to increase anything or not, but even staying at this market share for this year, I think is a very strong outcome.
Regarding some of the upcoming launches that you can talk about.
The exciting part of the launch is the new, what we are calling the big electric SUV, and we are calling it XCV9S.
Yes.
You'll learn more about that over the next few days as we lead into 27 November.
So with an increased focus on electric, what is the current booking, like monthly or quarterly, if you can talk about?
We have avoided sharing booking numbers, Sudarshan. So one of the things that we would want to be focused on, what are we doing? So we are in the region of 4,000 to 5,000 a month, which is what we had set out as our phase one objective. And then, of course, we have a new launch coming up.
Okay, welcome. That's the Mahindra & Mahindra management in conversation with my colleague Sudarshan.